And for more analysis on the markets, let's bring in Christopher Tahir, who's a Senior Market Strategist at Exness. Good to have you with us, Christopher. Now, the Nikkei is hitting record highs while its neighbours are seeing declines. Is Japan's export-led recovery now strong enough to decouple from the broader Asia-Pacific regional volatility?
Hello, come again.
Hi there, Christopher.
Hello.
I'll just repeat that for you.
Yes,
now, the Nikkei is hitting record highs while its neighbours are in a decline. Is Japan's export-led recovery now strong enough to decouple from the broader Asia-Pacific regional volatility?
As we all know that the current condition in Asian market is a little bit more stable because of the optimism that the conflict will not escalate further, despite there's no further talk that has been planned yet. Plus, we know that Donald Trump has mentioned that they will extend the ceasefire, which means that there will no further escalation, at least in the near term. So in this case, it creates confidence in the market that actually help to bolster the market sentiment.
Right, and as you mentioned, the extension of the ceasefire is holding, but Trump has kept the naval blockade. How can markets accurately price peace in when 20% of the world's oil is still blocked off in the Gulf?
So currently, we might not expect the oil price to decline. We might still expect that it will be elevated for a little bit longer until there is a clear resolution in the near future, which we have not seen yet. So we do not expect further decline or further softening in oil prices. However, when there's a new updates or new development that says that there will be certain resolution that is agreed by both sides, then it may bring optimism in the market again, and then plus the oil prices can go down. And at the same time, it will reduce the pressure on inflation in the oil-reliant countries such as China and Japan.
Right, and with gold regaining ground, is this a sign of confidence in the ceasefire or a warning that investors expect inflation to remain sticky regardless of the outcome of any negotiations?
So in the current condition, the markets itself is currently very worried about the potential increase in inflation because of the elevated oil prices. Because as we all know that most major countries are reliant to oil, except the US itself, because it is one of the biggest, if not the biggest, oil producer currently. So as we all know that currently many major central banks are eyeing onto the potential revival of the inflation, such as ECB, BOE, and BOJ. Although that in the market, we widely expect that the meeting in this month might not have any changes in their policy rates. So we still expect that the policy rates in this month will stay stable. But if the impact of the elevated oil prices become more prevalent, then we can expect the oil prices then we can expect the policy rate to be hiked in the near future in some of these countries.
Christopher Tahir in Kuala Lumpur, thank you very much for your analysis.